All right, Chad. So I got a long-term video for you. I was actually editing it, and I thought I would come back and add this at the beginning. I was trying to throw a lot of text in it. There's a couple of things missing. So one, you'll probably notice sister's long-term is missing. It's because my sister went to another country, and she needed to hit the TD thing and like update it. So I think she's bought the last couple of ones, but that's why I do not have that available here right now. So giving you that update. We have not abandoned it, but hopefully you see the story with that. And then another thing is that the balances on TD Ameritrade, I was going through and doing some math, and like I'm saying, while editing, I noticed, the net liquidity it shows you a different amount on TD Ameritrade versus the actual TOS. So sometimes this happens. I don't know if any of you can relate to this in some way. I think it's usually mixed with the daily gains, but it's like a couple $100 or a couple $1,000s off. So wanted to include that. I do give some text in there as well, but I know some of y'all are haters, and I don't want you guys to be misled in any way. So I hope you do see it. And anything I do miss, please ask any questions, and I will give you the update just in case I missed anything else. All right, much love. All right, ladies and gentlemen, I hope you had a wonderful day. Since we do not have a watch list, I thought I would give you a long-term update. So if you're not familiar, we have two different long-term accounts. This is the small one, and since 2019 we have been adding about $200 a month, and every year we increase that by 10%. I think now we are at like $245, and then we did the same thing on a bigger scale with about $2,000 a month. Now I want to give you an update. I want to go over everything. I have all of the new purchases. You'll be able to see the dividends and everything, and there's a lot to cover with it, but the one thing about it, I think it's a very realistic view from the market, as I'm about to show you, because it's not like everything won. I mean, on the big account, we are down 13% right now, and then on the smaller one, we are down about 7%, but I just think it's a very realistic view. It's not like we didn't take risk. It's not like we didn't lose on anything, but you get to see the balance. And I'm actually excited to show you that because we originally started off tilted to growth, but given the market and what we've seen and what we've added, believe it or not, we have actually tilted into value and dividends. So it's quite interesting. I made a couple pickups over the year. I'm going to go over all of them, and we'll be able to cover the dividends and all of that. But I wanted to give you guys an update, and I mean, let's talk about the elephant in the room. It's not the market. It's what everybody says. They're like, well, you're adding money to it. Well, yeah, that's the whole idea of saving and why we say the long term. You could check out the original video that we made, and even though even throughout the year, we took time to build up cash. It's not like we didn't want to play, but, the uncertainty of the market, just remember, and you'll see as we go through the purchases, we were dealing with this in real time. So it's kind of cool how it played out. But what I'm trying to highlight here is that imagine, even if you're depositing or not, it's like if you had $10,000 this year, last year, the year before that, doesn't really matter. But if you blow that load too fast, man, I mean, when it's all said and done, I mean, it could have played out different, and there was many opportunities to do either very, very good or very, very bad. And that's why, the tortoise versus the hare, you're actually getting to watch that play out. And I'm pretty content with what we have here, and I'm really, really excited about the future. So let's get into the transactions. I think that's what a lot of people want to see. And what did we do? So I don't know if I should make this bigger here. Maybe we'll get it bolded up and you can see. But let's just go through the year. I mean, I do have it as well on the transactions. And one thing, that always gets brought up, we have dividends. So we're not including any of these, and we have been reinvesting it over the last 3 years. Remember, that is the plan. And even then, you'll even see interest. And I did the calculation on it, since one of these accounts, the small one, it has margin, not the big one, but I believe all of the interest, it ended up balancing out. It was like you spent 40 cents and then you got it back for some reason. So it was like 1 penny of interest, which is something to keep in mind, but it wasn't too bad. But here's the simple breakdown of it. In January on the small account, this is the one where we deposit $240 on January 5th. I bought 2 of the Airbnbs at $164. Again, very high price. The market was different. That was before the rate hikes. And then we waited another month, and then in March 1st, I grabbed 2 JP Morgan at 137, and then a couple days later things kept getting worse, and then we made another purchase on March 8th at 127 for 2 more shares, and then on April 20th I grabbed one Netflix at 218. This one was a good one, and you'll even see, since we did the same thing on the Netflix but on the small account, I waited before striking, and we had bigger balances to play with, but we got a really good pickup on that one. And then on May 9th I grabbed 2 Ubers at 24.65, and then I also grabbed 1 Airbnb at 124. And then on June 27th, JP Morgan, it kept slipping from the beginning of the year. I grabbed 2 more at 116.48. And then you'll notice, and this is where I think a lot of people got confused on it, just think about it the last couple of years. If you have been watching, bro, and here are all the positions too. I know some people, this is the small account here, you could screenshot it, but over the last couple of years, we've been fully invested. So, with the uncertainty, the dollar getting stronger, all of that, it made sense to build cash, and you'll see what we did with it. It ended up paying us out heavily, and we actually still have cash to move forward. So I hope this update could kind of give you an idea of where we stand, but we built up some of that cash, and then on October, we grabbed 4 O's at $56. Then October 31st, I grabbed 2 Meta at $93.12. And then November 7th, we grabbed 50 Redfin at $346. So you'll probably notice Redfin, Meta, O, and JP Morgan. These were all of our new purchases for the beginning of the year. And then we did the same thing on the big account. So pretty much it was exactly the same, but bigger size on the big account. The only difference was I shot a little bit early on the Netflix on the after earnings, and then we waited till it went even lower and grabbed it. And it gave us a decent average. So our average on the big account is a little bit higher, I think like $20 higher than the small account. But pretty much did the exact same things. And one other thing on September 21st, before the Snap earnings and it got killed. If you remember from a couple years ago, we had a Snap covered call and it was worth about $3,000. So I covered that and I was down on it for the last 2 years. But since Snap got clapped and we lost our gains on that, I was able to make this one back. But we pretty much did everything else just with the equivalent size of the bigger account. So this is the breakdown, and that's everything we've done so far this year. And now I think we have about 2 more cash deposits left. Yeah, and then I think we're going to get another one here in a couple of weeks. But hopefully you're able to see it again when it's all said and done. It wasn't too bad. And I like it, and I'm very excited for the future here. And like we said, the net overall total unrealized and not including any dividends, and even then we reinvested all of our dividends. Small account performance -7% so far, and then on the big account -13%. And again, that's not including even $3,000 from the covered calls or any of the dividends. Now, this is where it's going to get interesting. Let's actually talk about the dividends. Here is the big account, and right now it's paying us about $2,000 a year, $188 a month. It says average yield is 4.5, but they're calculating that as the prices move, so we are actually yielding a lot more since some of our purchases, like it says Abivai's giving us 3%. Believe it or not, when we purchased it, I think we're yielding around like 6 to 9. Again, it's been a pretty wild ride with that one, but this is what I was saying in the beginning. And I'll go to the small account in a little bit, but you'll see it with the big one. We have now $50,000 worth of dividend-paying stocks, and this is what they're giving us. And again, it's all dividend reinvestment, but now the big account is $86,000 and 500 cents. I don't know, not 500 cents, but pretty much you do the math on that. That means $50,000 of the $86,000. We have about 58% on dividend-yielding plays, and then that means the other, 42%, that is on growth names. And why this is weird, because guess what? We were actually tilted to growth, but what ended up happening this year, the value plays have either held up very well or they did very good. And then again, even on Airbnb, we are down on that one. I still love it too, by the way. Don't get it twisted. And that's why we're going to use our cash balances, and hopefully some of the other pickups show you why, little by little impatience. It doesn't hurt, especially we have a very, very long time frame, but hopefully you're seeing kind of the benefit here, because we were growth and we were riding it up through all the year. And that's what is kind of like the gift and the curse. I mean, we were exposed to stuff. We got blown out on Coinbase, DraftKings, Big Commerce, Overstock, AT&T just sucked. And then WBD, this was actually just all free money from the spinoff. But hopefully you're seeing what I'm saying. It's like we exposed ourselves to so much, and we still own it all, and it's not like it's down too much given some of the gains, but we still own all of this. It gave us a lot of opportunity, but now as the growth came down, you see how the other side of the coin was able to do the work, man. That's teamwork, baby. Teamwork makes the dream work. So we have the cash. We're doing all that. And again, it's pretty simple, but since we avoided some other plays on this small one, and remember at the other year, we didn't have the opportunity to grab Ulta, and that one's been a big one. So you get to see it, but so far, I mean, our biggest loser is Beyond. That one's not even on the big account. This is the small one, the WBD, the Archite, Overstock. Again, we've taken some big losses on a lot of growth names. That's the name of the game on the big account. 90% on Big Commerce, 82% on Coinbase, and that's at a 246 average, which is crazy. 68% on DraftKings, WBD again, 64. That's the free one. Even Snap down 46. It would be like 20 if you count up the covered calls. And again, that's like the beauty with this whole account. Just remember, we own all of this, and we have been owning it. So even as the future changes and things go up, we've been collecting dividends, letting it do its thing. And, if we do get some rallies here, we will have the opportunity to sell some of those covered calls. And then I think the best performer, Abivai, and then a lot of the ones we hit here with that cash balance, they did very good. But Abivai, Coca-Cola, all the boomer plays did very good. Walgreens held on. MO, this is one I really like too, but he's kind of been back and forth. He's just been paying us like 8% for the last couple years. So not too bad, but hopefully you guys are seeing this, man, and I hope it is encouraging to both go slow little by little and always stay in the market. And I'm still very, very excited about it. So I hope this helps as far as where we move forward. I just plan on doing what we're doing, let some things ride. We got enough growth. We got enough dividends now, kind of go bargain bin shopping, but holding a little cash won't hurt. But for the most part now, I think at this point, we are still holding less than 10% cash. Again, even on the big account, after the deposit, it'll have like $7,000 in cash on 92 grand. Again, it's not even 10%. And same thing goes here for the small account as well too. So pretty much going to be looking to add the same names. I've been really, really focusing on the dividends, and I'm glad we did that in the beginning, and that's something I'm going to look for. But now, like you see, the market's down. Our portfolio has shifted to more value in dividends, so we do have the opportunity to buy growth. But like literally my last 3 purchases, they were all growth as well. So we're going to see, but hopefully this helps you out. And again, I know we haven't been able to update it as we took the cash break and everything else, but here are all the positions. Again, this is the small account, or that's the big account right here. I don't know why it says Ulta. Oh, I got to switch it right here. That's why. So here's the big account. Again, you can see everything, win and loss. That's what we're still holding. And remember, our plan is to never sell anything. Even the losers, we just stopped adding to them, saved our money, and been going there. Again, I still love Airbnb, but, I want it in the bargain bin, and, we don't have to force it. In the meantime, protecting ourselves and all that will go a long way. But, we know what we like and what we want. But you could screenshot this. I really, really do hope this helps. If you have any questions, leave them in the comments below, and I could always make another video. Or again, if you come on stream, we've actually done all of these live, and if you have the long-term alerts, you could have got a free text message as well too. So hopefully that helps, Chad, and God bless you, man, if you've been holding that long-term. And remember, just in the midst of everything, recession, no recession, high rates, low rates, this is your money, and we own these assets, and this could lead for business opportunities. Who knows, you want to start something, maybe things go bad, but for the most part, we got to preserve our capital to a pretty decent mode. We had a lot of opportunity. We still got upside, and we're still getting paid even while we're sleeping on the dividends. So overall, I'm just very, very excited about it, and I hope you are too, and you understand, this is the goal, and it's little by little. And, one of the most beautiful things is we've gotten every segment of the market. As the market has been adjusting, we've got to ride with it, and we've been getting a little bit of everything every month, every year, and it's beautiful, baby. So God bless you. Shout out to the long term, baby. It's going to take us home, but that is it, and I'll see you on stream tomorrow, baby. Peace out.